A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a whirlwind of economic updates, the latest Consumer Price Index report reveals that inflation remained flat in July, but an underlying figure has heated up, signaling potential repercussions from President Trump's tariffs. The Consumer Price Index, as reported by the Labor Department, showed a year-over-year increase of 2.7% in July, unchanged from June. However, the core CPI, which excludes the volatile categories of food and energy, surged to 3.1%, surpassing expectations of a 3% increase and higher than June's 2.9% reading. This data comes as the first set of figures following the abrupt dismissal of Bureau of Labor Statistics Chief Erica McIntyre by President Trump, following disappointing economic reports indicating a weakening labor market. In a move that has raised eyebrows, President Trump plans to nominate E.J. Antoni, a vocal critic of the Bureau, to lead the department. The report highlights significant shifts in energy prices, with gasoline prices dropping 9.5% over the past year, contributing to a lower overall inflation figure. However, the core CPI is viewed as a more accurate reflection of economic health. Specific sectors have seen price increases, with household furnishings and toys climbing 0.7% and 0.2%, respectively. Apparel prices also rose by 0.1%, reflecting the impact of tariffs on major textile manufacturers in countries like Vietnam, India, and China. Notably, prices for infant and toddler apparel soared by 3.3%, while footwear prices increased by 1.4%. Airline fares saw a significant rise of 4%, contrasting with declines in hotel and motel prices by 1.3% and leased cars by 0.4%. Food prices remained stable from June, but used car prices increased by 0.5%. Egg prices, which had been affected by a nationwide bird flu outbreak, fell by 3.9% in July after a sharp 7.4% decline in June, though they remain up 16.4% compared to last year. As U.S. businesses continue to grapple with the consequences of Trump's tariffs, Goldman Sachs economists report that these firms have absorbed approximately 64% of the tariff impacts. However, the July data suggests that businesses may soon be compelled to transfer additional costs to consumers through price hikes on a range of products, from luxury cars to everyday items like toilet paper and razors. Central bankers are closely monitoring the effects of tariffs on inflation as they deliberate potential interest rate cuts, despite ongoing pressure from President Trump, who has criticized Federal Reserve Chair Jerome Powell. The likelihood of a quarter-point cut in the Fed's upcoming September meeting has surged to nearly 94%, up from 86% the previous day, according to futures prices tracked by CME FedWatch. Analysts have expressed mixed reactions to the latest data, with some arguing that the headline figure is tame enough to warrant a rate cut, while others contend that the core figure is too high to justify any policy changes. Looking ahead, economists are focused on upcoming CPI data and another jobs report scheduled for September, both of which will play a crucial role in the Fed's decision-making process. As Chris Zaccarelli, Chief Investment Officer for Northlight Asset Management, noted, these reports will take on heightened significance as the Fed weighs the need to support the labor market against concerns over rising inflation. In another noteworthy development, the July CPI report marks the first since the firing of the chief labor statistician, following a dismal jobs report that revealed only 73,000 jobs were added in July. This report has raised alarms about the health of the economy and the effectiveness of current policies. President Trump has since nominated economist D.J. Antoni, known for his alignment with the Conservative Heritage Foundation, to lead the Bureau of Labor Statistics. The ongoing fluctuations in tariffs and negotiations have led to uncertainty, with many Americans yet to feel the full effects of Trump's Liberation Day tariffs. The president's inconsistent approach has earned him the moniker Taco among Wall Street traders, reflecting skepticism about his commitment to economic stability. Despite Trump's assertions, consumers are already experiencing the ramifications of tariffs. A report from the Yale Budget Lab indicates that Americans face an effective tariff rate of 18.6%, the highest since the Great Depression. The implications of these developments will undoubtedly be scrutinized by the Federal Reserve as Chairman Powell considers the balance between controlling inflation and stimulating economic growth through interest rate adjustments. As the economic landscape evolves, American consumers and businesses alike will be watching closely for further changes and their potential impact on everyday life. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.